Very good morning, everyone. How are you all? Everyone fine? Yes. So today we'll take the revision of Consolidated Financial Statement AS21. In this chapter, let me explain you that there are small concept. If you understand small concept, then you can do any big question also. So first I will give you the concept behind small parts of this chapter. Then once you have understood each small topic, then we'll come to big questions. Okay sir? Chale, can we start a revision of consolidation chapter? So of course it is AS21. From this chapter, of course one question is going to be asked in exam, that is of 14 marks. Mandate matlab it is compulsory, one question will come. There is no doubt about that. And if you are doing it correctly, so you are getting 14 out of 14. And what I have understood from examination point of view, that they are not asking so tough question from this particular topic. Why? Because this topic is also in CA final, and CA final it is also one of the, I will say, topic which students do not understand. So from CA inter point of view, it is very simple topic once you have understood small bits. Chalega? Yes sir. So AS21, you all know that it is for parent and subsidiaries. Now, who are parent company? The parent company are those company which control another entity, and that another entity is known as subsidiary company. Means we can say in this way, subsidiary company is those company which are controlled by parent company. It means subsidiary company is an entity that is controlled, you can see, controlled by another entity known as what? Parent company. Got this point? Correct. And parent entity is an entity that has one or more subsidiaries. And when we say group, so group consists of parent and subsidiaries. One thing, if you know about associate and joint venture, which will be coming up in AS23 and AS27, so group does not include associate and joint venture. So when I say group means parent and all its subsidiaries. So we prepare consolidated financial statement from group company's point of view. Means in this chapter, parent company will prepare their own financial statement as well as consolidated financial statement. So when parent company is prepare their own, which is known as standalone or separate financial statement, that is from only parent company's point of view. And whenever parent company is preparing the financial statement from group company's point of view together, considering it that the entire group company is a single entity, so that is known as consolidated financial statement. Yes sir. So one thing is clear, that how sir will understand control is acquired. Means sir, how will understand parent company has obtained control over subsidiary company. So AS21 has given two conditions. If any one of these conditions satisfied, so control is acquired. First condition is that if entity has directly or indirectly, more than 50% of voting power of another entity. 50% of voting power means 50% of total share capital. 50% of total share capital. Understood? So if any entity is holding directly or indirectly 50% of total paid up share capital of other entity, it means control is acquired. Now it is given directly or indirectly. Directly means if A is holding 60% of B, so we say it is direct holding. But sometimes B is holding, just try to understand, B is holding 40% of C and A is directly holding 20%. So because B is a subsidiary, so through B, A is also holding 40%. That is known as indirect holding. So 40 plus 20, it becomes 60%. So in this case, A is also having a control over C. Got this point? So A, if entity has directly or indirectly through subsidiaries, so indirect control should be always through subsidiaries. So that is known as indirect control. Got this point? Second condition is what? If the entity control the composition of the board of directors in case of company so as to obtain the economic benefit from their activities, then also control is obtained. So if the entity control the composition of board of directors in case of company, composition means power to govern the governing body. Power to govern means power to appoint, terminate the directors in the board of in the board of directors. So if they have power, they have a control, they have a right to control the composition of board of directors. Means they can decide how many directors will be there, which director need to be appointed, which director need to be retired. If that power they have, it means that entity has control over the other entities. However, from exam point of view, first condition is more important than second condition. So if from exam point of view, in any question, a company is holding more than 50% share capital of another entity, it means there is a control. Understood? There are some special point. When the entity has control over one or more entity, either directly or indirectly, the controlling entity, means parent company, is required to consolidate all controlled entity. So parent company is required to consolidate all control entity, even if the control entities are LLP or partnership firm. So it means the control entity can be in the form of company, it can be in the form of LLP, it can be in the form of partnership firm. But this point is not relevant from exam point of view, because normally in exam they will give two companies only, one parent company, one subsidiary company. Now as per AS 21, one clarification has been given. An entity which does not have subsidiary but has associate or joint venture, then also they need to prepare consolidated financial statement. Means if the parent company has subsidiary, so they prepare consolidated financial statement as per AS 21. But it's quite possible parent company has an associate, then I am saying P Limited has a associate, then they need to prepare consolidated financial statement as per AS 23. And P Limited has a joint venture, so they need to prepare consolidated financial statement as per AS 27. So of course this will be discussed in separate accounting standard. Right now we are concentrating for AS 21. Means in this chapter we'll understand how parent company will consolidate their all subsidiaries. Correct? Yes sir. So of course as per section 129 of Companies Act, means as per section 129 of Companies Act, which mandate every company to prepare consolidated financial statement. AS 21 has given only method of consolidation. AS 21 does not make it obligatory to prepare consolidated financial statement. This was just thora sa knowledge about AS 21. Now consolidated financial statement, I hope you have understood that CFS is prepared by parent company in addition to their own separate financial statement. So CFS is the financial statement of group, as if group company is a single entity. Correct? So when they are preparing consolidated financial statement, that will include consolidated balance sheet, consolidated PL account, consolidated notes to account, and consolidated cash flow statement. However, cash flow statement is not in our syllabus. For consolidation, consolidated cash flow statement is not in our syllabus. Cash flow statement is in our syllabus. But in this chapter we'll discuss consolidated balance sheet and consolidated SOPL also. We'll take one question for SOPL. It is also important from examination point of view. Got this point? Now coming to preparation of consolidated financial statement, AS 21 has prescribed line by line method for consolidation method. So of course we'll understand what is the line by line method. Line by line method means each line item of subsidiary company of financial statement should be added to the financial statement of parent company. We'll discuss this point. Correct. Now coming to the first concept, I said small concept are there. The first concept is what? Calculation of goodwill or capital reserve on the date of acquisition. Calculation of goodwill or capital reserve on the date of acquisition. So always we calculate goodwill and capital reserve on the date of acquisition. Date of acquisition is the date when the control is obtained. So there are actually two dates from examination point of view. One will be known as date of acquisition. So this will be the date of acquisition when suppose on this date 60% shares were acquired, and this might be reporting date 31st March. So this is known as date of consolidation, or you can say reporting date. Date of consolidation, or you can say reporting date. So there are two dates which you need to identify. So we calculate goodwill or capital reserve on this date. Goodwill or capital reserve will be calculated on this date. So how to calculate goodwill or capital reserve? Its simple formula is there. Ki suppose they acquired 60%, so we'll write down cost price of investment. Cost price of investment Can I say this will be taken from the standalone financial statement of parent company? In that investment will come that represent cost price of investment. That is nothing but purchase consideration. This will be purchase consideration. From this will minus 60%, because in this example I have taken 60%. 60% of fair value of net asset of subsidiary company on this date, on the date of acquisition. The difference, if positive, will be goodwill, if negative it will be capital reserve. This is the simplest formula. Correct formula you have understood. Concept number 1. So concept number 1 is what? Calculation of goodwill or capital reserve on the date of acquisition. So we need to find out purchase consideration. So purchase consideration is nothing but cost price of investment that will be given in the question. Means you are not supposed to calculate purchase consideration in this chapter. Why? Because PC will be given the balance sheet only with the cost price of investment. In amalgamation chapter we need to calculate PC. In this chapter, thank you very much, that will be given the question. So this become cost price of investment. From this will deduct parent company share in fair value of net asset of subsidiary. Correct? It means that we need to find out. Now when I say net asset is nothing but asset minus liability. So when I am saying net asset means asset minus liability, which is nothing but equity. So we can say in this way parent company share in the equity of subsidiary company. The parent company share in the equity we can say. So equity is nothing but asset minus liability. Understood? So goodwill or capital reserve will come. This is the concept number 1. Of course we'll take some question to calculate this. Now what is the concept number 2? Previous, we need to find out net asset on the date of acquisition. Means can I say to find out goodwill or capital reserve, you can see on this date we need to find out what? All asset of subsidiary company and minus liability of subsidiary company on the date of acquisition. Because to calculate goodwill or capital reserve, we need to deduct parent company share in the fair value of net asset. It means we need to find out net asset on the date of acquisition. But what happened? In the exam question, they will not give balance sheet on the date of acquisition. They will not provide you the balance sheet on the date of acquisition. Means they will not give you the information about assets and liability on the date of acquisition. It means we need to calculate this by some other information, that is equity available on the date of acquisition. Equity is nothing but, can I say, share capital plus reserve and surplus. So normally in exam they will provide you information about share capital and reserve and surplus on the date of acquisition, and therefore we calculate statement of net asset of subsidiary company on the date of acquisition by using equity approach. To understand why we are using equity approach, because they will not provide the information about assets and liability on the date of acquisition. Suppose they provide that information, so we can directly do asset minus liability, that is equal to what? Net asset. So what we'll do, we'll prepare statement of net asset, statement of net asset of subsidiary company on the date of acquisition and consolidation by using equity approach. I hope you have understood why we are taking equity approach. So simply we write down date of acquisition, date of consolidation, and the difference, the period between date of acquisition and date of consolidation is known as post acquisition period. We call it post acquisition period. Understood? The period between date of acquisition and date of consolidation is known as post acquisition period. Means suppose the date of acquisition is what? 1/4/2023 and this is 31st March 2024. This become date of acquisition. This is date of consolidation. So we call this 12 month is post acquisition period. This 12 month become post acquisition period for this particular question. It can be any period, it can be more than 12 months, it can be less than 12 months also, depending upon the information given the question. Got this point? Yes sir. I hope this much you understood. So how to calculate net asset? So we write on equity share capital on the date of acquisition and on the date of consolidation. Normally as per examination question, equity share capital on the date of acquisition and date of consolidation will remain same until unless there is some bonus shares. If there is some bonus here, it may change. Correct? But if there is no bonus here, we will always assume equity share capital on the date of acquisition and on the date of consolidation will always same. Therefore, difference will be nil. The difference will be nil. Then we write down reserve and surplus on the date of acquisition and on the date of consolidation. And the difference will be known as post acquisition profit. The difference will be known as post acquisition profit. Correct? So this become total net asset on the date of acquisition. This become total net asset on the date of consolidation. And any changes during this period, during post acquisition period, is known as post acquisition profit. We call it post profit. This much you understood. So this is statement of net asset. Now Third point is what? Concept number 3 is analysis of profit and time adjustment. Now just try to understand. If suppose shares are acquired, if I am saying, let me take one example. Suppose 1/4/2023 is given and this is 31st March 2024 and the shares were acquired on 1 July 2023. Suppose 60% shares were acquired on this date. 60% shares were acquired on this date. And suppose the cost price of investment is PC. Let us assume PC is equal to, let us assume 1,20,000. 1,20,000. Understood? Now on this date they will give you equity share capital. So they have given, suppose 1 lakh is the equity share capital. So on this date also equity share capital they have given 1 lakh. Understood? And they have given profit and loss account. Yeah, retained earning they have given. Retained earning means PL appropriation account. Retained earning means whatever surplus left in PL appropriation account after declaring dividend. Suppose that is given how much? They have given 2 lakh. Or better write down. They have given 50,000 and 1,50,000. Understood? But can I say we need to find out net asset on the date of acquisition? This become the date of acquisition. This become date of acquisition. And this is the date of consolidation. Now in this you can see the information about equity share capital and reserve and surplus they have given at the beginning of the year, not on date of acquisition. So what we'll do? We'll first find out a profit earned during this period. Profit earned. The profit earned during this period is what? 1 lakh. This minus this only. Closing balance minus opening balance. The profit earned become what? 1 lakh. 1 lakh is the profit. 1 lakh is the profit. Understood? And this will be allocated to pre-acquisition period and post-acquisition period. So can I say any period before the date of acquisition become pre-period and this become post-period? Understood? Pre and post. So this pre is how many month? 3 month. This post is how many month? 9 month. Are you getting what I am saying? So this 1 lakh will be allocated to pre and post acquisition period. Can you say practically this should be allocated as per the actual information? But from examination point of view, because actual information has not been given, what are the sales during pre-acquisition period, what are the sales during post-acquisition period, that information is not given. So we'll assume that profit earned during that period are uniformly earned. The profit earned are uniform. Therefore, this will be allocated to pre and post on time ratio basis. So we'll allocate in 3 month and 9 month ratio, which will be equal to 1 lakh. If I am saying the profit was 1 lakh, so we'll do into 3 divided by 12. That is how much? This will become 25,000. And this will become how much? 75,000. This is what? Analysis of profit. This is nothing but analysis of profit. Understood? Got this point? We will prepare one working note for that. Write down closing balance of PL. Here retained earning closing balance is what? 1,50,000. We'll write down opening balance is how much? 50,000. So the difference will be profit for the year. We'll call it profit for the year. Profit for the year is how much? That is 1 lakh. Now this 1 lakh will be allocated to pre. So we write down pre and post. We write down pre and post. And we'll allocate what? The profit will be allocated in 3:9 ratio, which will be 25,000 and 75,000. Correct? And in this, can I say we should add opening balance? If I add opening balance, the opening balance was the profit during pre-acquisition period. So opening balance will be added in this. Understood now? Opening balance will be added to pre-acquisition profit. Got this point? So total pre-acquisition profit become how much? 75,000. And this also becomes 75,000 post-acquisition profit. Got this point? This is known as analysis of profit. Got this point? So analysis of profit means to find out pre and post acquisition profit. Pre and post acquisition profit. Similarly, there may be some reserve and surplus given. So any reserve and surplus also will find out how much pre and post. So any reserve and surplus may be given apart from retained earning. So if there is some general reserve, so we'll find out how much general reserve is pre and post in the same way as per the information given in the question. So you can see parent company has acquired equity shares of subsidiary company during the year. So this concept is applicable only when the shares are acquired during the year. Then profit earned by subsidiary company will be allocated between pre and post acquisition profit. If actual information about profit earned during pre and post acquisition period is not given, normally it will not be given and it cannot be calculated, then it will be allocated between pre and post on the assumption that profit of subsidiary company has been earned uniformly throughout the year. Hence, profit of subsidiary company will be allocated on time basis. So you can see one format I have given: PL, other reserve, closing balance, opening balance. This will be profit for the year. It will be allocated pre-post. It will be also allocated pre-post, and then we add opening balance. So this become total pre, this become total post, this become total pre-reserve, this become total post-reserve. As per ICA solution, this pre-profit is also known as capital profit. If you see the ICA working note, so they have written calculation of capital profit, calculation of revenue profit. So capital profit means pre-acquisition profit, revenue profit means post-acquisition profit. Don't be confused by observing isolation. However, from my point of view, capital and revenue are not a correct term. It should be pre-acquisition profit and post-acquisition profit. Therefore, I am using that particular term only. However, from exam point of view, you can also use capital profit and revenue profit. Got this point? Yes, sir. Now, there is one assumption is there. If suppose the opening balance of PL is not given, if the suppose opening balance of PL is not given, so always will assume that opening balance of PL या retained earning is nil. So if the opening balance of retained earning या PL and retained earning are same, correct now? Profit and loss appropriation account, retained earning are same. So when I am saying opening balance of PL or retained earning is not given, then always we need to assume that opening balance nil. But if the opening balance of other reserve apart from retained earning is not given, then we'll assume opening balance and closing balance the same. And these are general assumption which you cannot change. You need to use this assumption only. You are supposed to use this assumption only, correct? So if the opening balance of PL or retained earning is not given, then assume opening balance of PL is nil. If the opening balance of other reserve is not given, assume opening balance of other reserve is equal to closing balance. Got this point? Correct. So this you have understood. Now धीरे धीरे will increase the level of analysis of profit. Means first I will make you expert in analysis of profit. चलेगा? Now concept number 3 you have understood. Let us come to concept number 4, abnormal item. Abnormal item. So I will take one question, from that I will explain. Let me take one example. Now what happened? Suppose they have given 1/4/2023 and 31st March 2024. And same I am saying, कि suppose the date of acquisition is 30th June 2023. On this 60% was acquired. 60% was acquired. चलेगा? 60% was acquired. Got this point? Yes, sir. Now they have given equity share capital. On this date they have given 1 lakh. So this will be also 1 lakh. And they have given PL. Let us assume 50,000 and 1,50,000 as I have done in the last example. But I will add one point. What is the add one point? Ki suppose during this period, means during the pre-acquisition period, there was an abnormal loss of rupees 10,000. Abnormal loss of rupees 10,000. Understood? This is the question. So how to analyze the profit that we are doing? So can you say we are doing analysis of profit? Analysis profit. So we write on PL, but we write on closing balance is what? 1,50,000. Opening balance is what? It is 50,000. So this profit, whatever is coming, my question to you, this profit is after what? After abnormal loss. Is after abnormal loss, correct? So profit after abnormal loss is what? 1 lakh. 1 lakh. Now, can you assume that abnormal loss has occurred uniformly throughout the year if it is given that abnormal loss has been incurred during pre-acquisition period? So can you see, if you are applying time ratio in 1 lakh, that will be not correct, because abnormal loss occurred during only pre-period. It may also occur in post-period also, as per the information given in the question. So what we'll do? First we'll do plus abnormal loss. So abnormal loss is how much? 10,000 will be added. So we'll get profit before what? We'll get profit before abnormal loss. That is how much? 1,10,000. And this profit will be allocated into pre and post in time ratio. So time ratio is what? It is 3:9. 1 second, because I have given 30th June as the date of acquisition. So date of acquisition is what? 30th June. Understood? Correct? Got this point? So it will be allocated 1,10,000 into 3 divided by 12. How much? It is coming 27,500. Correct? Minus 1,10,000. How much it is coming? 82,500. Do we have allocated? Got this point? Correct. Now from this we'll do minus abnormal loss, because abnormal loss has happened during pre-acquisition period, so it should be deducted from what? Pre-acquisition period entirely. If suppose in our question it was given that abnormal loss has happened in post-acquisition period, so we would have deducted from post-acquisition period. Are you getting what I am saying? Are you able to understand? Bolo. Simple. So it become what? Now it become what? Allocated profit. So now it become allocated profit, whatever profit after abnormal loss, that is 17,500 and 82,500. Correct? In this we'll add opening balance. Opening balance is how much? 50,000 and nil. So this become total pre and post acquisition profit. This becomes 67,500 and this become 82,500. Understood? Have you understood? Correct? So this is known as analysis of profit, and after that we'll prepare statement of net asset. So statement of net asset will be what? We write on date of acquisition, date of consolidation, and we write on post. Correct? So for the equity share capital, how much given on date of acquisition? 1 lakh. Equity share capital will remain unchanged, and the date of consolidation also 1 lakh. And you can see PL, date of acquisition. So can you say pre-profit is available on the date of acquisition? So 67,500 will be added here. And post is how much? 82,500. So total become how much? 67,500 and 82,500. This will be always equal to closing balance. If it is coming equal to closing balance, means we are doing correct. So this become what? Total net asset, means equity share capital plus PL is nothing but net asset. So total net asset on the date of acquisition is how much? It is 1,67,500. And this is what? 82,500 and this become 2,50,000. Understood this point? Have you understood this point? Correct. Now what happened? We'll allocate this into 60% and 40%. 60% belong to parent company and 40% will belong to minority interest. Minority interest means those shareholders of subsidiary company which are other than parent company. Correct now? So minority interest means non-controlling interest. The parent company is controlling for 60%. So other shareholders are known as what? Minority interest. So can you see the 40% of net asset belong to minority interest? Got this point? So this will be allocated in this ratio. This will be allocated in this ratio. So of course we can do that. So 60% will be the share of fair value of net asset. This becomes share of fair value net asset. So allocation we can do. Allocation part we can do. Understood? And this post acquisition profit will be also distributed to parent company and minority interest in 60% and 40%. Correct? This post acquisition profit, this will be transferred to PL of what? Parent company, and this will be transferred to minority interest. This will be transferred to minority interest. Correct? Now this will be also added to minority interest. This will be also added to minority interest, and this will be adjusted to calculate goodwill. Means when we'll do calculation of goodwill or capital reserve, so this will be taken into consideration. So this I'll come to next concept, but abhi right now objective was abnormal loss. Have you understood abnormal loss and analysis of profit? Other working note we'll discuss, but have you understood this? Yes sir, we have understood. Abnormal loss you have understood. Next concept is what? Let us come to next concept. So abnormal loss, you can see if any abnormal loss item is given in the question, such items should be eliminated to calculate profit before abnormal item, and such profit should be allocated between pre and post acquisition profit as per the time ratio. You can see closing balance, opening balance, this become profit for the year after abnormal loss. Then add abnormal loss, this become profit before abnormal loss. Then allocating pre and post acquisition profit. So this become profit before abnormal item allocated in time ratio. Then less abnormal loss, it can be during pre acquisition period or it can be during post acquisition period as per the information given. It can be pre or it can be post. So deduct from pre, deduct from post as per the date of occurrence. As per the date of occurrence, this will be profit for the year and in this will add opening balance. This will be become total pre, this will become total post. Chalega. Next concept is what? Concept number 5 is dividend declared and paid by subsidiary company. Dividend declared and paid by subsidiary company. Let me take one question. Dividend declared and paid by subsidiary company. So if I say similar example I am taking, suppose this is 1/4/2023, this is 31st March 2024. Let me change the date of acquisition, otherwise you will think that always the date of acquisition will be that. So let us say 1st October 2023 is the date of acquisition, and they acquired 70% of equity shares on this date. So this become date of acquisition and this become date of consolidation. Chalega. Now they have given equity share capital. Suppose 1 lakh they have given यहाँ पर, and they have given 1 lakh यहाँ पर. Understood? And they have given PL. How much they have given PL? 50,000 and 1,50,000. Understood? And is given the question that during the year after the date of acquisition, final dividend at the rate of 15% was declared by subsidiary company. Means when I say final dividend paid, so in the current year dividend has been paid for previous year. Means this final dividend has been paid from which profit? From this year profit, from pre-acquisition profit. One thing is clear, that so whenever they are saying final dividend paid, it means that dividend belong to previous year. When they are saying interim dividend paid, so interim dividend is paid for current year. Interim dividend is paid for current year. Normally I have seen in question they are not asking interim dividend, they are only asking final dividend. So final dividend is being paid means it has been paid for which year? Previous year. Understood? Correct. Now one thing is clear, just try to understand. If it is paid after the date of acquisition, so it means, can I say it will be received by whom? Parent company and minority interest. 70% received by parent company because they acquire 70%, and 30% will be received by minority interest. It will be received. Got this point? Now if it is declared, if it is paid and declared and paid before the date of acquisition, so can you say then it will not be received by parent company, because that time parent company were not holding any shares of subsidiary company. So if it is, be careful, if it is declared and paid before the date of acquisition, then it will be not received by parent company. However, till now this type of question they have not asked, and whenever question is silent, we will always assume that dividend is declared and paid after the date of acquisition for this chapter. So if nothing has been given, we will always assume it is paid after the date of acquisition. Understood? Correct. This is the question. Now in this case also we will prepare analysis of profit. So analysis of profit in this question also. So we write down PL. What is the closing balance given? 1,50,000. What is the opening balance given? 50,000 given. So batao, this become, can you say this become profit after appropriation of dividend? To profit after dividend, this become profit after dividend. How much? 1 lakh. This is a profit after dividend. Correct. But can you say profit after dividend is not a net profit? Net profit means what? Always profit before dividend, because from SOPL we calculate net profit, and that net profit is transferred to what? PL appropriation account, and from PL appropriation account we declare dividend. From PL appropriation account we declare dividend. Understood? Correct. So can you see this is not a net profit, and whenever we are allocating any profit in time ratio, there should be net profit. That should not be profit after dividend. So in this also what we'll do, we'll add final dividend. Final dividend will add. Understood? So final dividend is what? I have said 15% of equity share capital 1 lakh. So 15,000 will be added. So 15,000 will be added. So this will become profit earned during the year. So this become profit earned during the year, means profit of the year. So 1,15,000 become profit of the year. This profit will be again allocated to pre and post acquisition profit. Pre and post acquisition profit. So we'll allocate in time ratio, and time ratio in my question it is 6 months and 6 months right now. So 1,15,000 divide by 2 kar do, that is means the into 6 by 2 means divide by 2 kar do, that is 57,500 and 57,500. Understood? In this we'll add opening balance. Opening balance add kar do. Opening balance batao, we'll add in pre or post? Of course in pre. So pre will be add 50,000 and this will be nil, and from this will minus dividend paid. So final dividend paid deduct from this, final dividend paid deduct from this. So if it is declared from pre-acquisition profit, then deduct from pre. If it is declared from post-acquisition profit declared, then deduct from post. Correct? Now you only say even though paid after acquisition, but okay, this belong to previous year, so it means that it has been declared from pre-acquisition profit. Correct? Now because this final dividend is nothing but dividend of this year, so this has been declared from this year profit, it means declared out of pre-acquisition profit. Understood? So are you able to understand what I am saying? When I am saying final dividend paid in current year, but it is declared from previous year profit, and previous year profit in this question is what? Previous year profit in this question is what? Previous year profit in this question is what? Pre-acquisition profit. Therefore, will minus from pre-profit. How much? 15,000 will be minus. Got this point? Correct? If it is declared from post-acquisition profit, then deduct from post also. There can be a situation when it declared from post-acquisition profit also, but I hope this much you understood. This much you understood. So it become 57,500 plus 50,000 minus 15,000. How much? This become 92,500 and this become 57,500. Got this point? Any doubt? Bolo. Correct. After this we can prepare statement of net asset. Statement of net asset. We write down date of acquisition, date of consolidation, and post may, of course, we have retained profit. How much post is there? Post acquisition profit. So equity share capital given how much? 1 lakh. 1 lakh. Correct. And our PL or retained earning, what is pre? It is 92,500. And what is the post? Post is 57,500. So it become 92 plus 92,500 plus 57,500. How much? 1,50,000. So you can see this is what equal to closing balance. Means we are doing correct. So this become 1,92,500, 57,500 and 2,50,000. Understood? So this become net asset. This become net asset on the date of acquisition. Date of acquisition and date of consolidation. This is required for calculation of goodwill or capital reserve. Understood? So this net asset is required on the date of acquisition. Or can I say we can do in this way also? Sunna means in my class I have done this way also. So that is also correct. Don't be confused. Don't be confused. Equity share capital how much? 1 lakh and 1 lakh and 57,000. Sorry. Then we write down PL. So PL what we'll do? First we write down this much only. Means this plus this. Don't deduct what? Abhi if I am doing in this way, so both will be same only. I am just informing that presentation is also correct. So this amount is how much? 57,500 plus 50,000. How much? That is 1,07,500. So we'll say 1,07,500. And this is how much? 57,500. This become 1,65,000. Correct. So this actually is coming net asset before payment of dividend. Correct now. So this is 2,07,500 and 57,500 and 1,65,000. Correct. Sorry, 2,65,000. Now from this what we'll do? We can deduct minus final dividend paid. तो यहाँ से minus को तो कोई दिक्कत नहीं. If you are deducting from this, then also same answer will come now. So you will do minus final dividend paid from which column? You only say from date of acquisition or post. You only say. So we'll do minus final dividend paid 15,000 because it is declared from pre-acquisition profit. So deducted from this. Deducted from this. Understood? Means the formula is what? Date of acquisition plus post is equal to date of consolidation. Correct. Now this is the formula. Date of acquisition plus post acquisition profit is the date of consolidation. So this becomes, so the same answer will come now. 1,92,500, 57,500 and this become 2,50,000. This presentation bhi chalega. You can do in this way also. Some teacher teach in this way, some teacher teach in this way. Both are correct. Both are correct. Have you understood this point? Have you understood this point? Bolo. Got this point? Any doubt? No doubt. Simple? Simple? Yes, sir. Okay. So this you have understood. So what they have given? If you see the format, closing balance, write down. Opening balance, write down. This become profit after dividend. In this add dividend paid. Add dividend paid. So this become profit for the year. This profit for the year should be allocated to pre and post acquisition profit. Pre and post acquisition profit as per time ratio. इसमें will add opening balance. This will become total pre and total post. Then minus dividend paid from pre or from post as per the source of distribution. Just see that dividend has been declared from pre-acquisition profit or post-acquisition profit. If declared from pre, minus from this. If declared from post, then minus from post, and this become total pre and total post-acquisition profit. Understood point? Correct. Now, one thing we have understood that any final dividend which is paid after the date of acquisition, correct, now will be also received by parent company. Means any dividend which is declared and paid before the date of acquisition, that dividend will not be received by parent company. That dividend will not be received by parent company. This point you have understood. The final dividend declared out of previous year profit. Correct now. Means one information I have given in this. What information? Ki any final dividend is declared out of that. You have understood that final dividend is always declared out of previous year profit. Previous year profit. Correct now. Which may be pre-acquisition profit, which may be post-acquisition profit. Normally, just try to understand. Suppose they have given only 1 year information. Just try to understand. This is what 1 year, and this is 1 year right now. Yeah, let me explain from 2 years. Now suppose this was the date of acquisition and this is the date of consolidation. It means there are 2 year post-acquisition period. So these are 2 year, year 1 and year 2. There are 2 post-acquisition period. Now any final dividend paid यहाँ पर, final dividend paid यहाँ पर, but this is declared from which year? Can I say from this year? This year. Suppose this is what? Let's say this is 2021, this is 21-22, and this is 22-23. Correct. So this final dividend is paid for which year? For 2021. तो बताओ this profit is what? Pre-acquisition profit or post-acquisition profit? So of course can I say this is pre-acquisition profit? So this profit is pre-acquisition profit. Therefore this final dividend which is been paid in which year? Which has been paid in 21-22 is actually declared from pre-acquisition profit. Pre-acquisition profit. But now year 2 mein whatever final dividend has been paid by subsidiary company. Correct. This has been declared for which year? This has been declared for previous year. Previous year is 21-22. Now you only say this is the period after acquisition. So this period, this profit is pre-acquisition profit or post-acquisition profit. You only say. So of course can this become post-acquisition profit? Means the second dividend has been paid, has been declared out of post-acquisition profit. Has been declared out of post-acquisition profit. Have you understood this point? So this has been declared out of post-acquisition profit. Post-acquisition profit. Have you understood? So it is quite possible in your exam they have given 2 year post-acquisition period. Then this type of information become relevant. Got this point? Have you understood this point? So what I want to say, if this dividend has been declared from pre-acquisition profit, then deduct from pre. If this dividend has been declared from post-acquisition profit, then deduct from post. Then deduct from post after allocation in time ratio. Understood this point? Yes, so that information only I have given. Same thing, interim dividend is declared out of current year profit, which may be pre-acquisition profit, which may be post-acquisition profit as per the date of acquisition. Now dividend declared and paid by parent company. Suppose the question has said dividend declared and paid by parent company. Can I say any adjustment related to parent company is not at all important for this particular chapter, because whatever working note we are doing only from subsidiary, because subsidiary is incorporated in the financial statement of parent company. So dividend declared by parent company is already recorded in the parent separate financial statement, already recorded. Thank you very much. So therefore no adjustment required. If suppose no journal entry has been done or there is some error in recording that journal entry, then adjustment is required. So dividend declared and paid by parent company, if already recorded correctly is not relevant for this chapter. It is not at all relevant for this chapter. Got this point? So this concept also completed. Understood? Next point. Concept number 6 is what? Treatment of dividend received by parent company from subsidiary company. So treatment of dividend received. Now treatment of dividend received is any dividend received by parent company will be accounted as per AS 13. Will be accounted as per AS 13. Now you have done AS 13, correct? So treatment of dividend received by parent company from subsidiary company as per AS 13. So already you have done AS 13. So what AS 13 says that if any company is receiving pre-acquisition dividend, so that dividend will be deducted from cost price of investment, that will not be transferred to PL account. So any dividend which is declared out of pre-acquisition profit, any dividend which is declared out of pre-acquisition profit, समझे? Got this point? Will not be transferred to PL account, will be created to investment account. Then we pass one journal entry, bank account debit to investment account. Correct. But if dividend received is post acquisition dividend, means dividend received is declared out of post acquisition profit. Dividend declared is, are you getting? Dividend received is declared out of post acquisition profit of subsidiary company, then it will be a revenue profit, and the revenue profit will be transferred to PL account. Then your journal entry, bank account debit dividend income and transferred to PL account. This will be transferred to PL account. It means, can I say it will be already recorded in the SOPL of parent company. But sometime what happen, as per the question given in exam, they will say dividend received, yeah, pre-acquisition dividend received has been wrongly credited to PL account. So suppose this is not correctly recorded, means this entire dividend whatever received has been transferred to PL account, then it is wrong treatment. So for wrong treatment you need to pass one correct journal entry before consolidation. So what will be correct journal entry? If suppose they are saying whatever dividend received which has been declared out of pre-acquisition profit has been transferred to PL account, it means your PL account has been created, but your investment account should be created. So what will be the correct journal entry? Correct journal entry what? Now you will say PL account debit to investment account. So what you will do? You reduce the profit of parent company and you reduce the investment account also. So if the parent company has wrongly created pre-acquisition dividend received to his PL account, then following rectification entry should be recorded before consolidation. What journal entry? Dividend income will be debited which has already transferred to PL account. PL account debit to investment. Correct? Means debit means this we reduce the consolidated PL. Means with this amount we need to reduce the consolidated PL of parent company and also reduce the cost price of investment. Means now whatever investment cost price given, that is actually not correct, we need to rectify that. So whenever you are calculating goodwill or capital reserve, then we write down purchase consideration, cost price of investment, okay, but from this case we should also deduct pre-acquisition dividend received which is wrongly credited to PL account. So any pre-acquisition dividend received if wrongly credited in PL, then we should deduct it from this. Then this become carrying amount of investment as per AS 13. Then from this minus parent company share in fair value of net asset, then this will become goodwill or capital reserve. Understood? So this is rectification required. Rectification required. Let me explain. Let me explain with one question. Suppose if I am saying this is 1/4/2023 and this is 31st March 2025. Understood? Correct. For simplicity, I will write on date of acquisition this and date of consolidation this. Means you can see there is no time adjustment required. Correct. And they have acquired 70% of equity shares by payment of 3 lakh. Means this become cost price of investment. Now they have given equity share capital on this date is 1 lakh. This is also 1 lakh. And they have given retained earning of PL account. Retained earning means surplus, retained earning, correct now, or you can say PL. They have given suppose 50,000 and 2,50,000. Understood? And they have given final dividend paid at a rate of 10%, and here also final dividend paid at a rate of 10%. Correct? This information has been given. So you can see here post acquisition period is 2 years. Here post acquisition period is 2 years. Quite possible. Understood? Now, but the first you will do analysis of profit. Analysis of profit. Correct? Got this point? So analysis of profit, what you will do? You write down PL or retained earning. Closing balance how much? It is 2,50,000. Opening balance how much? 50,000. So can I say this become profit after dividend for 2 years. That is how much? 2 lakh. Now in this we'll do plus final dividend paid. Final dividend paid. So 2 times it is 10% of 1 lakh. Means can I say 10,000 into 2? 2 year na. So 20,000 will be added. So this become 2,20,000. 2,20,000. Now this will be allocated to pre and post. Now can I say this is the profit of entirely 2 year? Entirely 2 year, and entire 2 year is post only because this was the date of acquisition, therefore no allocation required. Entire profit belong to post acquisition period. Entire profit belong to post acquisition period. So allocation if you do, correct na, allocation, so the pre will be nil and this will be entirely 2,20,000. In this we'll add opening balance. Opening balance what? 50,000 will be added and this will be nil. So this become what? 50,000 and 2,20,000. Understood? Have you understood this point? Bolo. Have you understood this point? Yes sir. Now from this we'll minus final dividend paid. You only say the first dividend whatever has been paid is for this year, previous year. So this you only say this is pre-acquisition profit or post-acquisition profit. So this is pre-acquisition profit. So first dividend has been paid from pre-acquisition profit. So this is what? 10,000 minus, and second dividend has been paid. This second dividend has been paid from which profit? From which profit? You only say this has been declared from this year. So this is post-acquisition profit. So post-acquisition, तो deduct from post. This is special point. तो 10,000 minus करेंगे यहाँ से. This you have understood. So this become what? 40,000 and this is what? 2,10,000. Have you understood this point? Correct. Now we'll prepare statement of net asset in this. Statement of net asset. So prepare statement of net asset. Write down date of acquisition, date of consolidation and post. So equity share capital is coming how much? 1 lakh and 1 lakh. And retain earning बताओ on the date of acquisition means pre is what? 40,000. 40,000 लिख दो. And post is how much? It is 2,10,000. 2,10,000. Total become what? 2,50,000. This is equal to closing balance. Got this point? This become what? 1,40,000 and 2,10,000. Now this will be allocated. So they have acquired what? They have acquired 70% at rupees 3 lakh. So in this parent company share is what? 70%. Minority interest share is what? 30%. So 1,40,000 का 70% how much? That is 98,000. Correct now. And 30% how much? 42,000. Similarly 2,10,000 का 70% how much? 1,47,000. And this is what? 63,000. Understood? This much. Now what we'll do? We'll do calculation of goodwill or capital reserve. So bata, what is the cost price of investment? Cost price of investment given the question. So we acquire, just try to understand, we acquire at rupees 3 lakh and case from this pre-acquisition dividend received after that has not been deducted. However, that will be given the question. Correct now. So it is understood from this dividend is not yet deducted. So 3 lakh यहाँ लिखेंगे. 3 lakh. The cost price 3 lakh from this minus what? Pre-acquisition dividend. Minus pre-acquisition dividend. So this 3 lakh was coming in the balance sheet as on the date of consolidation. So it is understood that till now pre-acquisition dividend not deducted. That is the wrong entry. Now pre-acquisition dividend means what? Any dividend which has been declared from pre-acquisition profit. This only, not this. So any dividend which is declared from pre-acquisition profit, uska 70% how much? Received by parent company means 7,000 received by parent company. So minus only 7,000. minus only 7,000. So don't do for total dividend का 70%. Only the dividend which has been declared from pre-acquisition profit. So out of this 20,000, this dividend has been declared from pre, this dividend has been declared from post. Have you understood this point? This point is important. Correct. So this become what? Key carrying amount of investment as per AS13. So this become 3 lakh minus 7,000. It is 2,93,000. From this will minus, can I say 70% of fair value of net asset of subsidiary company on the date of acquisition. So we'll minus this 98,000. 98,000 minus kar do. So if we minus 98,000, the difference will be goodwill. So goodwill is coming how much? Goodwill will be 2,93,000 minus 98,000. That is what goodwill. 1,95,000 will be goodwill. Understood? Correct. Have you understood this much? Got this point? Ha. Can you see this will be transferred to MI. So your total MI will become minority interest become 42,000 plus 63,000, that is equal to 1,05,000. 1,05,000 will be minority interest in the balance sheet, and this will be added to the consolidated PL. This will be added to the consolidated PL. So these three working note are very important. If you have understood this much, so can I say one part has been completed, because most of the question will have dividend paid. Most of the question. Understood this point? Yes, sir. So dividend receive also you have understood? Dividend receive? Yes, sir. Now, only one point attention, that if dividend is declared before the date of acquisition, be careful. However, this the particular point is not given in the question. So if dividend declared and paid by subsidiary company before the date of acquisition, then it will not be received by parent company. Don't do any journal entry for pre-acquisition dividend receive. Correct? चलेगा. Means AOP तो will do correct. Means AOP, यहाँ पे AOP will do minus 10,000. But if suppose this has been declared before the date of acquisition, then it will not be received by parent company. Then this particular point will not be applicable. This particular point will not be applicable. If the question is silent about the payment date of dividend, then we'll always assume in this chapter that dividend has been declared and paid after the date of acquisition. We'll assume this. Okay, sir. This also you understood. Next concept is what? Concept number 7 about the fair value adjustment of assets and liability of subsidiary company on the date of acquisition. Now we have understood that all the assets and liability of subsidiary company will be recognized in the balance sheet of parent company on the date of acquisition at fair value. Correct? So it means, can I say some fair value adjustment is required? Means when I am saying, just try to understand, when I am saying if I am taking equity share capital plus reserve and surplus, okay, this become book value of net asset. Book value of net asset. But if the fair value information about net asset is given, so we should find out fair value now. So some fair value adjustment is required. Normally in exam, fair value information will be given only for property, plant and equipment. Normally, it can be for any other asset, it can be for any other liability also. But from exam point of view, they normally provide fair value information of property, plant and equipment. Let me take one question. Suppose they have given this information. On 1/4/2023 and 31st March 2024, and the date of acquisition, let us say it is 1/7/2023. Correct. Now they have given equity share capital. Once again similar information, they have given 1 lakh. Understood? Similar information. They have given PL. Suppose 20,000 or 1,20,000, 2,40,000. चलेगा? Understood? But they have given one information about fair value of property, plant and equipment. So they have given property, plant and equipment. Fair value as on this date is 1 lakh. Correct. And they have given opening balance of this property, plant and equipment. Opening balance they have given, let's say 50,000. And they have given rate of depreciation 10%. They have given RVM. 10% they have given RVM. Correct. These are the information given. Correct. Got this point? So one thing is clear that can I say there will be some fair value, means there will be some increase in the value of asset because of this fair value information. So first working note what we'll do in this, working note number 1 will be fair value adjustment. So we'll first find out fair value of this property, plant and equipment as on 1/7/2023, means on the date of acquisition 1 lakh is given. And can I say we need to compare this with the book value on the same date, book value on the same date. But they have not given book value on the same date, but they have given opening balance 50,000 and they have given rate of depreciation 10%. So you can charge 3-month depreciation to find out what book value. So 50,000 into 10% into means 5,000 into 3 divided by 12. How much is coming? 1250. So minus 50,000. Can I see it will become 48,750? 48,750. Correct. So this become, can I say, fair value gain on the date of acquisition 1/7/2023. Correct. But this gain exists on which date? On the date of acquisition. Means on the date of acquisition means it is what? Pre. It become pre-acquisition profit. So this will be added to the pre-acquisition profit. So 1 lakh minus 48,750 means 51,250 will be added to the pre-acquisition profit. Means what a journal entry will do? Asset account debit means asset will increase by 48,000, asset will increase by 51,250 and the pre-acquisition profit will increase by 51,250. So what journal entry we are doing? Actually, if you think from journal entry's point of view, asset account debit to pre-acquisition profit. So your pre-acquisition profit will increase by 51,250. Correct? This much you understood? But just try to understand. Now, everyone, for this subsequent period, means post-acquisition period, can I say subsidiary company has already charged depreciation on this for 9 months, and subsidiary company has charged depreciation on opening balance for 9 months. But can I say now parent company will charge depreciation for 9 months on fair value? On fair value means on 1 lakh. Because if the subsidiary company has acquired this asset on the date of acquisition at rupees 1 lakh, so they will charge depreciation on 1 lakh. But subsidiary company has already charged on opening balance. Therefore, can I say due to this fair value gain, there will be some additional depreciation during post-acquisition period. So post-acquisition profits will be reduced by that additional depreciation. Post-acquisition profits will be reduced by that additional depreciation. So how to calculate that additional depreciation, that we need to understand. So in this, what we'll do, we'll calculate additional depreciation. Additional depreciation, which will what? So can I say, we can say in this way, कि parent company will charge depreciation 1 lakh into 10% into 9/12. 9/12, yes. So 1 lakh into 10%, 10,000 into 9 divided by 12. So it is coming 7,500. But subsidiary company has already charged depreciation on opening balance. Opening balance was how much? 50,000 into 10% for 9/12 they have already charged. So it is 5,000 into 9 divided by 12. How much? It's coming 3,750. Means what will be the additional depreciation? Additional depreciation will be 7,500 minus 3,750. That is what? That is 3,750. So additional depreciation will be 3,750. Have you understood this point? Correct. So for this, what journal entry we are doing? Pre-acquisition profit will increase. Means journal entry we say to asset account debit to pre-acquisition profit. Our journal entry will asset will increase, means PP will increase to pre-acquisition profit, pre-profit. And for this, can I say asset will decrease and post-acquisition profit will also decrease. So we'll pass one journal entry, post-profit will decrease to what asset? Asset will also decrease by this amount of depreciation. Correct. Means can I say if you are preparing AOP, this can be added to pre and this can be deducted from post. This can be added to pre and this can be deducted from post. Got this point? Yes, sir. Correct. Now, Can I say we can do this calculation in this way also? Simple. He will say fair value is what? 1 lakh. Opening balance is 50,000 into 10% into 9 by 12. So we can use this also. So whenever question has said that depreciation is calculated by using RBM, then always use this formula. Always use this formula. So whenever depreciation is calculated by reducing balance method, then this will be formula fair value minus book value into rate of depreciation multiplied by period. Got this point? But if SLM now, if suppose rate of depreciation SLM, then what will do? Whatever fair value gain has been calculated, means in our question it was 51,050 into 10% into 9 by 12 will do. Means directly depreciation will be calculated on what? Increase, because SLM, so SLM may directly will calculate depreciation on increased amount, So fair value gain into what? 10% into 9 by 12 into 10% into 9 by 12. Understood? This you need to remember कि RBM तो in this way, SLM तो this way. हाँ, if question is silent, always follow RBM. कसम खा लो. If the question is silent, always follow RBM. Don't follow SLM. The question is silent, follow RBM. Don't follow SLM. But if SLM is there, then directly calculate on 51,250. Be careful about this point. Have you understood this much? Bolo. Have you understood this point? This too you have understood. Now can I say this was fair value gain? It is quite possible there is some fair value loss. If there is some fair value loss, then we'll pass reverse entry. That pre-acquisition profit will be debited, means reduced to asset reduced. And can I say if there is a fair value loss, so if there is a decrease in the value of asset, so it means subsidiary company has charged, means if I say this is the situation calculate करते हैं. The same situation, suppose कि fair value is equal to 1 lakh and the book value is equal to 1,20,000. तो यहाँ पर there is a fair value loss. Fair value loss is what? 20,000. This will be deducted from pre-acquisition profit. But now you only think कि parent company will now charge depreciation on 1 lakh and subsidiary company have already charged depreciation on higher amount. Means suppose they have charged on 1,20,000, so it means the parent company will charge depreciation lower amount. So it means there is some saving in depreciation. So saving in depreciation means what? We need to increase the post-acquisition profit. So due to saving in depreciation, your post-acquisition profit will increase. Got this point? Yes, sir. Yes, sir. So that is only given in this. Let us now summarize. Assets and liability of subsidiary company are recognized in CFS of parent company at their fair value on the date of acquisition as per AS 21. This point have you understood? Whenever net asset is calculated by equity approach, following adjustments are required. Adjustment number 1, calculation of fair value gain or loss on the date of acquisition. So we need to find out fair value gain or loss on the date of acquisition. That is nothing but asset liability both. But normally in exam they give only PP. Therefore I have given example of PP. But can you see this is the fair value of asset, this is fair value liability. This is a book value of asset, this is book value of liability on the date of acquisition. So if there is any increase, in asset, or there can be decrease in asset, increase means what? Gain, decrease means what? Loss. If there is an increase in liability, it becomes loss. If there is a decrease in liability, that becomes gain. That too we know. Correct? Yes, sir. Means for fair value gain, what journal entry will do? Asset account debit to pre-acquisition profit, or if the liability decreases, so we'll pass liability account debit to pre-acquisition profit. So asset or liability account debit to pre-acquisition profit. Correct. Similarly, there is a fair value loss or journal entry what? Pre-acquisition profit account debit to asset or liability. Got this point? But normally they don't ask about liability. Adjustment number 2, due to fair value adjustment, post-acquisition profit of subsidiary company will be also adjusted. For example, for increase in the value PP, additional depreciation on increased amount will be deducted from post-acquisition profit. For decrease in the fair value of PP, depreciation already charged on decreased amount will be added back to post-acquisition profit. Means I hope this entire point you have understood. For additional depreciation, what is the journal entry? For additional depreciation, post-acquisition profit reduced. So post-acquisition profit account debit to asset. For reduction in expense, reduction in depreciation, your post acquisition profit will increase. So asset account debit to post acquisition profit. Got this point? This concept also done. Then come to next point, concept number 8. Concept number 8, correct now? Means after 2 more concept will take some question. Chalega. So concept number 8 is what? Cancellation of intercompany debt due to intra-group transaction. Cancellation of intercompany debt due to intra-company transaction. Means this is similar to what we have done in amalgamation chapter. Means there can be some mutual debt, means payable, receivable, payable of parent company, receivable of subsidiary company may be same. Means due to transaction between parent company and subsidiary company, this need to be cancelled. So payable account debit receivable, any difference in this journal entry will be always check in transit. This already I have explained in my amalgamation revision. So any difference will be considered as check in transit, and check in transit will be shown under cash and cash equivalent in the balance sheet. So payable account debit receivable, means there can be 2 situations in exam, either both are same, then thank you very much, or it is quite possible 9,000 is payable but 10,000 is receivable. So it means one company has already issued check but other company has not received check, so difference will be check in transit. The third situation is actually not possible. So this third situation they will never give in exam. Second is what? For cancellation of mutual acceptance. Mutual acceptance means bill payable, bills receivable. So bill payable account debit to bills receivable. If both are same, means whatever drawn by one company is accepted by another company, then to okay, cancel. But sometime what happen? Ki bill payable is 10,000 and this is 9,000. It means what? Bills receivable of 1,000 has been discounted by drawer. Discounted by drawer. So okay, this whatever discounted by drawer, it is actually payable to bank. Therefore, it cannot be cancelled. So whatever bill which is already discounted cannot be cancelled. So in this, the cancellation will be only to the extent of 9,000. Cancellation will be only to the extent of 9,000, and bill which is already discounted will remain in the balance sheet. The bills payable because that is payable to bank. Because that is payable to bank. Understood this point? This point also you have understood. Then come to concept number 9, that is cancellation of unrealized profit on unsold stock or asset due to intercompany transaction. Let me explain this. Concept number 9. We are doing concept number 9. Cancellation of unrealized profit. Now there can be 2 type of transaction. One is known as downstream transaction. Similar point we have done in amalgamation, but thoda sa difference hai. Downstream transaction. Correct. It means parent company has sold goods to subsidiary company. Parent company has sold goods to subsidiary company. Suppose good costing rupees 10,000 has been sold at a profit of rupees 1,000. So sold at rupees 11,000. This become cost price of stock of what? Subsidiary company, and this include 1,000 profit, unrealized profit. URP means unrealized profit of parent company. Correct. Now in CFS, okay, this stock will also come when we are preparing CFS. This stock will become at 11,000, but 11,000 include profit of what? Parent company. Batao. So it is not correct now. So that profit need to be eliminated. So okay, profit of parent company is included. So we'll say profit of parent company means consolidated PL account will decrease to what? Inventory. This journal entry will do. Consolidated PL, or you can say retained earning account debit. You can say retained earning account debit or PL account debit to inventory. But this become very simple. Means entire unrealized profit will be cancelled from stock will reduce, and that profit will be reduced from consolidated PL account. Consolidated PL account in balance sheet. But if I am saying subsidiary company has sold goods to parent company, this is also quite possible. This is known as upstream transaction. This is known as upstream transaction. Understood? Upstream transaction. Got this point? Bolo. So upstream transaction means what? Suppose costing rupees 10,000 was sold at a profit of rupees 1,000. So sale price become 11,000. Now this becomes stock of parent company. Stock of parent company 11,000. Now this include profit of what? This include profit of subsidiary company. Now stock of parent company include profit of a subsidiary company. That need to be also eliminated. But if you want to eliminate profit of subsidiary company is actually belong to 2 owners. One is parent company, one is what? Minority interest. and therefore that profit should be allocated to two-party parent company and NCI. So what you can do in two way. Means what journal entry will do? We need to reduce post acquisition profit. So post acquisition profit will reduce account debit to what? Stock. This journal entry we can do, but this is allocated to parent company and minority interest. And parent company means what? The parent company share will go to what? P only. So it will go to consolidated PL, or you can do directly like this. You directly do consolidated PL account debit, minority interest account debit to what? Stock. Both will have same effect. Means sometime you can directly reduce from post acquisition profit, which will be ultimately allocated to what? Parent company and minority interest. Or directly you can do in that working note ki allocate directly to what? Consolidated PL and minority interest. That direct adjustment you can do. Both are correct. Means either you can do this journal entry or you can do this journal entry, your choice. But whenever it is downstream transaction, then don't reduce post acquisition profit, because this is the profit of parent company included in the stock of subsidiary company. So profit of parent company you are eliminating. So profit of parent company will be eliminated from, not from post acquisition profit. Post acquisition profit is of subsidiary company. Pre and post whatever we are calculating, that analysis of profit is of subsidiary company. Correct now. So if this is downstream transaction, directly deduct from consolidated PL. So be careful about this point. Understood this point? Have you understood this point? Bolo. Chalega. So that is only done. कि downstream transaction, the goods are sold by parent company to subsidiary company. Then your journal entries were PL of parent company to stock, retained earning account debit stock directly with the amount of URP. URP means unrealized profit. Upstream transaction, goods are sold by subsidiary to parent, so it is retained earning, minority interest. So this is as per the share of parent company, as per the share of minority interest. Or you can reduce what? You can do this journal entry also. Reduce post acquisition profit to what? Stock. So post acquisition profit you can reduce, that also you can do. Means that is your choice how to do it. Both are correct. Got this point? Yes sir. This also you have understood. Chalega. Of course, can I say if SOPL is required, then can I say we'll also cancel the purchase and sale in SOPL. Means the sale of parent company will become purchase of subsidiary company, or vice versa. So you need to reduce the sale and purchase from SOPL. So that we'll do. One question will take. There I'll explain this particular point. Okay. Means up to bonus years we have done. Means bonus year is left. Up to bonus years we have done. So we can take some question for practice. Come to question number 8. Come to question number 8. I think up to this so you have understood. Yes sir. So balance sheet as on 31st March 2016. H limited, S limited they have given, H limited, S limited they have given. Equity share capital 5 lakh, 3 lakh. General reserve they have given 1 lakh 70,000. Profit and loss account they have given 2 lakh, 1 lakh. So these are the closing balance. In the balance sheet always closing balance will come. Creditor they have given 1 lakh 30,000. PP investment shares 70% they have acquired. So this is what? The carrying amount of investment as per AS 13. 4 lakh, 3 lakh PP current asset given. Shares in S limited were acquired on 30th June. 30th June means during the year. So there will be some time allocation. Balance in general reserve and PL account on 1/4/2015. So they have given opening balance of general reserve and PL account that is required. During the year, dividend at a rate of 10% was paid by S limited for the year 14-15. 14-15 is previous year, and therefore the dividend from is pre-acquisition profit, that is given also. Even though not given, it is understood it is pre-acquisition profit because final dividend is paid from previous year. And in this case, in this question, previous year is what? Pre-acquisition profit only. But you can see the date of payment is not given. So we'll assume paid after what? Paid after the date of acquisition. Correct. And just write down one point. कि dividend received is transferred to PL. If transferred to PL, the wrong treatment has been done, because dividend received transferred to PL, so this is wrong treatment. We need to rectify this. Now there was an abnormal loss of 1/5/2015, means during pre-period of rupees 10,000. Insurance claim received is 4,000, means net loss is 6,000. Net loss is 6,000. When the shares were purchased, agreed value means fair value. Fair value of PP of S Limited was 4 lakh. Although no effect has been given thereto in account, depreciation has been charged at a rate of 10% per annum on book value on reducing balance method. Even though reducing balance method is not given, we'll assume reducing balance method. This is what prepare CVS. So we need to prepare CVS. Can we prepare? Bolo. Yes, we can prepare. So let us prepare. चलेगा. So let us start the preparation part. So let me draw the timeline. पहले question number 8 we are doing. This is what the balance sheet date is 31st March 2016. Date of acquisition they have given how much? That is 30th June 2015. So this become 1/4/2015. They have given PL and general reserve. Opening balance how much given? It is what? 70,000. PL is given, and this is what given? 20,000. Closing balance we can take from balance sheet. The closing balance you can see 1 lakh and 70,000 is given. 1 lakh and 70,000. So 1 lakh is PL. 70,000 is what? I am writing for your understanding all the information. Equity share capital also you can take from balance sheet, that is 3 lakh. 3 lakh and 3 lakh. This all information is required. Then they have given one abnormal loss is during pre-acquisition period. So abnormal loss of how much? 6,000. Net loss is 6,000. Then there is one final dividend paid. Final dividend paid after acquisition. So that is how much? 10%. 10%. 10% of capital only, that is 3 lakh. 10% of capital. Correct. And they have acquired 30th June. How many? 70% was acquired on this date. 70% was acquired on this date. On this date, what is the fair value? Fair value of PP. So fair value of PP they have given 4 lakh. But you can see book value as on this date is not given. But the book value of PP is given from balance sheet. What is the book value of PP is given? You can see book value of PP is given 3 lakh. Book value of PP is given 3 lakh. These are all information. Understood? Chalega? Any doubt? Now, can I see in this question, first we'll do fair value adjustment. Always do working note number 1 with fair value adjustment. Chalega? You can see we want book value as on this, but this to not given. But they have given closing balance of book value, and they have given rate of depreciation. Rate of depreciation is 10%. So can I say we can find out opening balance? Opening balance will be 90. This 3 lakh is the 90% of opening balance. So we can find out opening balance. So opening balance will be 3 lakh divided by 90%. Yes or no? That is 3,33,333. So opening balance we can find out. And if you charge 3-month depreciation on this, so we can find out this book value. This book value. So therefore we can derive the book value on the date of acquisition. Can we do the working note? Write down. We are doing working note number 1. Fair value adjustment. Fair value adjustment. So write down fair value on the date of acquisition means 30th June 2015, that is equal to 4 lakh. Then we'll compare with the book value on 30th June 2015. So opening balance is 3,33,333. This we have calculated minus depreciation of 3 months. So 3,33,333 into 10% into 3 divided by 12. How much it is coming? 83,333. So what is the book value coming? Is 33333 minus 8333 is equal to what? 3,25,000. So this become book value. So what is the fair value gain? Fair value gain is what? You can see minus 4 lakh. That is what? 75,000. 75,000. Now on this we'll calculate additional depreciation. Additional depreciation for post acquisition period. for post acquisition period ना, post acquisition period means during 9 month. तो बताओ parent company because RBM, तो RBM means parent company will charge depreciation which amount on 4 lakh, but subsidiary company has already charged depreciation on opening balance. Be careful, don't take this amount, opening balance this amount, this is danger. Normally student do mistake यहाँ पर, तो minus will do 3,33,333, correct ना? Have you understood this point? This is actually danger. Into what? 10% into what? 9/12. This is coming how much? मतलब 4 lakh minus 3,33,333 into 10% into 9/12. 9 divided by 12 कर दो. That is coming 5,000. So 5,000 become additional depreciation. Correct. Means can I say this will be added? This will be added to the pre-acquisition profit. Added to pre-acquisition profit. And this will be deducted from post-acquisition profit. Correct. And the net increase what? If you see net increase in PP is 75 minus 5, that is 70,000. This will go to balance sheet. Means this will be added to PP. This will be added to PP in balance sheet. This will be added to PP in balance sheet. These are the adjustments. Don't write in exam in this way. Only do working note. Chalega. Working note number 1 done. Now we'll come to working note number 2. Working note number 2 will prepare what? Analysis of profit, will call it AOP. Analysis of profit. So there are two things. They have given PL and they have given reserve also. They have given general reserve also. Na, so write on GR. Can you give me the closing balance? So closing balance is what? 1 lakh and 70,000. Opening balance is what? Batao. Opening balance is what? Opening balance is how much? That is 70,000 and 20,000. So what is the profit after dividend? Profit after dividend is 30,000 and 50,000. Got this fine? Correct. Now two adjustments are there. One is abnormal loss, one is final dividend paid. So we'll do plus abnormal loss because we want for allocation profit before abnormal loss. So abnormal loss will be added to PL because it will be deducted. It has been deducted from PL, so added to PL. And plus we'll do final dividend paid. Final dividend paid. So final dividend paid is 10%, na? 10% of 3 lakh, that is 30,000. So 30,000 will be also added. This have you understood? So this is coming how much? The profit before dividend and before abnormal loss is how much? That is 66,000 and 50,000. Correct. Now this will be allocated to pre and post acquisition profit. Pre and post acquisition profit. This will be also allocated to pre and post acquisition profit because this is also profit earned during the year. Correct now? So pre and post. Now time ratio is what? It is 3:, this is 3:9. Time ratio is 3:9. So allocate kar do. So in time ratio it will be allocated 3:9. Allocate karo. So 66,000 into 3 divided by 12. How much? 16,500. Correct. This is 49,500. Then 50,000 will be coming 12,500 and then 37,500. In this we'll add opening balance. Add kar do opening balance. Yeah, you can do पहले deduct minus abnormal also, but पहले add कर दो opening balance. Opening balance 70,000 will be added यहाँ पर and 20,000 will be added यहाँ पर. Then minus abnormal loss. बताओ abnormal loss happened during pre-period or post-period? Pre-acquisition period. So minus 6,000 from this. Minus 6,000 from this. And minus final dividend paid. But the final dividend paid has been declared from pre-acquisition profit or post-acquisition profit? Pre, तो minus करो pre से. Pre से कितना minus करेंगे? 30,000. So minus pre. Have you understood? So this become your final calculation. So this is how much? Batao. 16,500 plus 70,000 minus 36,000. So this become 50,500. I'm writing here 50,500. Post is what? 49,500. This become 12,500 plus 20,000. This become 32,500. And this is 37,500. Up to this, any doubt? This is your analysis of profit. Correct. Now in this only you can add that fair value adjustment, or you can do in Sona also, your choice. Means as per IC solution they are adding यहाँ पर, means I am just saying you can add यहाँ पर, directly you can Sona, you can add यहाँ पर only. So can I say you will do fair value adjustment also? Add कर दो for property, plant and equipment. So बता what was the fair value gain? Means that will be added to pre-acquisition profit. How much? 7,500. Either you can do यहाँ पर or you can do from Sona. Both will give same answer. जैसे I have said about dividend. Correct ना? So in some of the class, in some of my inter class, I have done directly from Sona. So answer will remain same. And your post acquisition depreciation कितना था? That was 5,000. So 75,000 यहाँ पे add करो and 5,000 deduct from this. Correct. So this is coming how much? बताओ. So it is 50,500 plus 75,000 is 1,25,500. And this will be 49,500 minus 5,000. It's coming how much? 44,500. 32,500. 37,500. Understood this point? So I'll do Sona in two ways so that if in class I have done with Sona, you will not be confused. Have you understood this much? Bolo. This much you understood? Batao. Now I'll prepare Sona. Working note number 3. Sona means statement of net asset. So we write down date of acquisition and date of consolidation. In post now you should write down 2. One is PL, one is general reserve. One is PL, one is general reserve. But what is your equity share capital? That is 3 lakh and 3 lakh. Understood? Then what is your PL? PL batao. First I am doing as what we have done right now. This will become 1,25,500 and post is what? 44,500. So total 1,25,500 plus 44,500. It will become 1,70,000. 1,70,000. Why? Because closing balance was 1 lakh and net increase in PP was 70,000. Fair value, net fair value gain. So that become 1,70,000. Now add general reserve. General reserve is how much? Pre is what? 32,500. Post right down in general reserve 37,500. So it will become 32,500 plus 37,500. Total is 70. That is closing balance, means we are doing correct. Total is what? It is 3 lakh plus 1,25,500 plus 32,500. This become 4 lakh 58,000, 44,500, 37,500, and this will be 3 lakh plus 1,70,000 plus 70. However, this total is not important. 5,40,000 is not important. This is the only I am writing to match, to find out whether we are doing correct or not. Because if this is tallied now, this is tallied, so we are confident that we are doing correct. Got this point? Understood. Now this will be allocated in which ratio? What was the 70%? So 70% means how much belong to parent company? How much belong to MI? So 70% and 30% belong. So karo. 4,58,000 into 70% how much? This is 3,20,600 minus equal to what? 1,37,400. Then 44,000 into 70% how much? That is 30,800 minus equal to 13,200. Then 37,500 into 70% how much? That is 26,250 minus equal to 11,250. Understood? Either you can do in this way. chalega. Or we can do in this way also. I'll just show how I have done in the class. In class you can see when I have prepared this, so I have written 3 lakh, 3 lakh, then I have written first PL only this much. Check karo. One minute. Okay. This total is, I think, wrong. We have done something wrong. 1 minute. 16,500 plus 70,000 plus minus. Okay, ठीक है. Means what I have done? Ki I have done only opening balance on this and final dividend I have deducted from here, which I have shown now, and fair value adjustment I have done here. But ultimately the answer remains same. You can see 4,58,000. What is our answer? You can see 4,58,000. Then 44,500. Then 37,500. The answer remains same. So you can do minus final dividend paid and fair value adjustment after Sona also. That is your choice. Means that is also correct. This is also correct. That is also correct. This is correct. Whatever you want, you can follow. Understood? Means you can see in analysis of profit, I have just only allocation करके छोड़ दिया and minus only abnormal loss. So final dividend paid and fair value adjustment I have done from Sona, but ultimately the answer remains same. Ultimately the answer remains same. Got this point? Have you understood? Got this point? Yes, sir. So this was working note number 3. Then coming to working note number 4. Working note number 4 will calculate goodwill or capital reserve. Or we can say this working note as cost of control. Cost of control. Batao. What is the cost price of investment? What was the cost price of investment? So that is from balance sheet. Balance sheet देखो 2,70,000 it is given. So 2,70,000. But can I say dividend received was not correctly recorded? So you can see how much dividend was paid declared out of pre-acquisition profit. That is 30,000. And is given the question, already I have said that it was not correctly recorded. So you will do minus what? Pre-acquisition dividend. Pre-acquisition dividend received. So again that will be 30,000 into 70%. That is 21,000 minus करो. तो 21,000 minus किया. Correct. So 2,70,000 minus 21,000. How much? That is 2,49,000. And from this minus 70% of fair value of net asset subsidiary company. So can this amount? So this amount will come यहाँ पर. That is 3,20,600. So this will be what? Capital reserve. So how much capital reserve? Minus 3,20,600. So capital reserve will be 71,600. Understood? This was working note number 4. Then come to working note number 5. Working note 5 will be minority interest. Minority interest. In exam write down full minority interest. Now what is the value of minority interest as on the date of acquisition? Means 38 June 2015. So already we calculated. देखो, this is the value of MI on the date of acquisition, that is 1,37,400. To add 1 lakh, यहाँ पर 1,37,500 plus, can you see we write down post acquisition PL, share in post acquisition PL. You can add on share in post acquisition PL. That will come 13,200 and 11,250 is reserve. So 13,200 add करो. Then plus post acquisition reserve. Their share means 30%. 30% is what? 11,250. So add कर दो 11,250. Total is coming how much? 1,37,500 plus 13,200 plus 11,250. That is 1,61,950. Then last working note number 6 will be what? Consolidated reserve and surplus. that is PL and general reserve. PL and general reserve. So first we write on balance of PL and general reserve as per parent company balance sheet. As per parent company balance sheet. So as per parent company, you can see general reserve is 1 lakh and PL is what? 2 lakh. Understood. In this case, there is one rectification that you don't forget. Pre-acquisition dividend minus करना पहले. तो minus pre-acquisition dividend received because that was credited to PL. How much? 21,000 minus करना. Correct. Then you will do what? Plus share in post-acquisition profit. So plus share in post-profit. Post-profit. So how much will be added to PL? बताओ PL. It is 30,800 ये and general reserve में 26,250. तो 30,800 ऐड कर दो. And general reserve में how much? It is 26,250. ऐड कर दो. This become the final answer. So this is 2 lakh plus 2 lakh minus 21,000 plus 30,800. It is coming how much? 2 lakh 9,800. Then 1 lakh 26,250. This is the final answer. Understood. Now let us prepare CBS. CBS I am just only writing the line item. In exam prepare with the full format. Can you say equity share capital will be how much? It will be only 5 lakh because no adjustment for this. Then under the reserve and surplus, okay, general reserve will come as per working note, that is 1,26,250. Then PL will come as per working note, that is 2,09,800. There is one capital reserve. Capital reserve will come as per working note, how much? 1,61,009. Capital reserve is how much? 71,600. 71,600. Format prepare as per format. I am not writing format. Minority interest. Minority interest will come between equity and liability as a separate item. Minority interest how much? That is 1,61,950 or kitna? Plus. It was 37,500 na? So this is 13,350. Okay. Some calculation mistake हुआ यहाँ पर. It is 44,500. तो 44,500 का 70% how much? 31,150. And it is 13,350. So it was 13,350. Just cross check whether we have done some mistake. एक बार check कर लेते. 3,20,600. Okay. 1,37,400. Okay. Then 31,150. 13,350. Okay. Then 26,250. 11,250. This is the correct. Correct. 71,600 correct. Is coming 1,37,400. Is 1,37,400. Why I have written 500? This mistake हो रहा था. 1,37,400 है. ओके चलो अभी राइट नाउ माई कॉन्सेंट्रेशन एक्सप्लेनेशन. दिस कमिंग 1,62,000. ठीक है यहाँ पर चेंज होगा. दिस वाज पोस्ट एक्विजिशन प्रॉफिट 31,150 था. $2 lakh minus 21,000 plus 31,150, that is 2,10,150. Okay sir, now correct. Check कर लो एक बार. It's 2,10,000, 1,26,050. So the balance it will tell him is what I want to say. This is 2 lakh. My interest will come 1,62,000. And there is one creditor. Creditor will come plus because no adjustment is there. So 1,30,000 it will come. What is the total balance? बताओ. 5 lakh plus 1,26,250 plus 2,10,150 plus 71,600 plus 1,62,000 plus 1,30,000. So it is coming 12 lakh. 12 lakh. Let's see my solution. It is coming 12 lakh or not? It is coming 12 lakh. But in format you write on a balance sheet. And then we write on PP. PP will come how much? Batao. It is coming 4 lakh plus 3 lakh, 7 lakh. But in 7 lakh we'll add 70,000. 70,000 is 75,000 minus additional depreciation 5,000. So it becomes 7,70,000. Correct. Investment will not come. Current asset there is no adjustment. So current asset will come 4,30,000. 4,30,000. And this will become 12 lakh. And balance sheet will tally. But in exam, please don't use this format. Use this format. Write down in this way. Dekho, properly. Understood? Correct? So one question we have done. We have understood up to what? Up to concept number. We have done up to concept number 9 we have done. But we like to take some more question. एक दो क्वेश्चन और करते हैं प्रैक्टिस के लिए. कैन वी टेक? तो कम टू सम मोर क्वेश्चन. तो बोनस शेयर्स तो अभी वी हैव नॉट डन. तो लेट मी टेक सम क्वेश्चन विदाउट बोनस शेयर्स. कम टू दिस क्वेश्चन. This question was an interesting question. This question was asked in exam for 15 marks. 34 let us do. H Limited acquired 64,000 equity shares of rupees 10 each on 1st October 2019. Means 1st October 2019. The balances of two companies as on 31st March 2020 were as under. You can see equity share capital of rupees 10 each. General reserve. General reserve they have given as on opening date. It means opening balance and closing balance are same. So it means opening balance and closing balance are same. Profit and loss account they have given only closing balance. So it means opening balance and closing balance are different. Preliminary expense they have given, this was created on 1st April 2019 and the closing balance is also same. Means there was samjhna, it means opening balance and closing balance are same. But preliminary expense they have given on 1st April 2019. 1st April 2019. Correct. Got this point? Yes. Yes sir. So it is quite possible that subsidiary company was formed on 1st April 2019. It is quite possible but no, because chalo theek hai. Preliminary expense 1st April 2019 they have given 20,000. Bank overdraft, this is one new point. Bank overdraft, bills payable, trade payable, everything is given. Investment equity shares given. Okay. Now additional information. The profit and loss account showed a credit balance of 1,20,000 on 1st April 2019. It means, can I say this is the opening balance of PL account. S Limited paid dividend of 10% out of the same on 1st November. So paid after the date of acquisition for the year ended 2018-19. Means paid for previous year. The dividend was correctly recorded. Oh, correctly accounted. So dividend is correctly accounted. Means, can I say this is whatever investment is coming, that is already deducted. Already from this pre-acquisition dividend has been deducted. 1 second, don't deduct. Very good question. The plant and machinery which stood at rupees 6 lakh on 1st February 2019, which book value is 6 lakh, was considered worth rupees 5 lakh 20,000 on the date of acquisition by H Limited. Means on the date of acquisition, the fair value is what? 5 lakh 20,000. And depreciation 10% per annum, nothing is given, always apply RBM. Always apply RBM. Prepare consolidated balance sheet, you need to prepare. Let us do. So we are doing question number 34. So you also do with me, so it will help you. Okay, sir. So first, working note number 1 will do what? Fair value adjustment. So fair value they have given on which date? On 1st October 2019. How much? It is 5 lakh 20,000. We want book value on the same date, on 1st October 2019. So they have given opening balance. How much they have given? Opening balance 6 lakh. So we'll charge 6 month depreciation. 6 month depreciation, because up to 1st October 6 month depreciation is required. So it is 6 lakh into what? 10% divide by 2 kar do, because 6 month, so 30,000. So it will be how much? 5 lakh 70,000. So you can see there is a fair value loss. How much loss? 50,000 loss. Correct. Now it means there will be some saving in depreciation. So saving in depreciation for post acquisition period means for the balance 6 months there will be some saving. So once again RBM. So first you will take what? What is the fair value? So 5 lakh 20,000. Correct. What is the opening balance? Minus 6 lakh. It means parent company had already charged depreciation on 6 lakh, but parent company will charge on 5 lakh 20,000. So into 10% into 6 by 12. So it is coming how much? 6 lakh means 80,000 into 10% divide by 2. So it is equal to what? 4,000. So 4,000 becomes saving in depreciation. 4,000 becomes saving in depreciation. Correct. It means what is the net increase? Net decrease below. Net decrease. To net decrease 50 minus 4. 50 minus 4, that is 46,000. Correct. One thing is clear, that this will be deducted from pre-acquisition profit and this will be added to post-acquisition profit. This much you understood? Chalega. First working note done. Now second working note will do what? Analysis of profit. So do analysis of profit. Analysis of profit. So you have PL, you have general reserve. First you give closing balance. So closing balance is what? It is coming 3,28,000. Okay, 3,28,000. From that you can deduct, you can easily deduct 20,000 preliminary expenses. Are you getting what I am saying? One minute. There is a preliminary expenses of how much? 20,000. Okay, sir. It means they have given how much? 3,28,000. And what is the opening balance they have given? Minus 1,20,000. That is 2,08,000. Okay. How much dividend is there? Dividend is 10%. So 10% of what? 8 lakh. Got this point? So I'm just writing. So it become closing balance 3,28,000. General reserve closing balance is what? 4,20,000. And opening balance is what? Opening balance they have given 1,20,000. And this it is similar 4,20,000 only. Got this point? So what is the profit after dividend? That is 3,28,000 minus 1,20,000. That is 2,08,000. And this will be nil. Chalega. Then in this we'll add final dividend paid. The final dividend paid is 10% of 8 lakh. 10% of 8 lakh. That will come 80,000. So what is this profit? This become 2,88,000. This is nil. This will be allocated to pre and post because there is no abnormal loss in this. This will be allocated to, I'm just writing pre and post. On which basis? 6 months is to 6 months. So this will be 1,44,000. 1,44,000. This will be nil nil. And this will add opening balance. Opening balance what? 1,20,000. And here opening balance what? 4,20,000. Correct. Then minus will do final dividend paid to, because final dividend has been paid from pre-acquisition profit. So minus 80,000 will do from this. Then there is one preliminary expenses. So preliminary expenses to be deducted because it was actually created on 1/4. So this was also existing on the date of acquisition. So preliminary expenses, can I say, will be reduced from capital profit, means pre-acquisition profit. Pre-acquisition profit. So it will deducted from what? Pre-acquisition profit. This have you understood? This is a new point. Understood? This point. If suppose preliminary expenses was created during post acquisition period, because it was created on 1/4/2019, it is given, so it should be deducted from what? Pre-acquisition profit only, because that was available on the date of acquisition. That was available on the date of acquisition. Got this point? Have you understood this point? Bolo. Correct. Are you able to understand what I am saying? Any doubt? No doubt about this? Yes, sir. So 20,000 has been deducted. 20,000 has been deducted. Okay, sir. Or we can do in this way also. Because it is a closing balance, we can deduct directly from 20,000, 20,000 yahan se. We can do in this way also. Then your opening balance will be 1 lakh. Then your opening balance 1 lakh. So this opening balance, this and this is nothing but 1 lakh. So you deduct from closing balance or opening balance both. Correct now? But so you can do in this way also. Have you understood this particular point? Yes, sir. I think now in this you can add what? Fair value loss, means fair value adjustment is how much? So what is the fair value loss? That is 50,000. 50,000 minus karo yahan se. And what is the depreciation? 4,000 we need to add yahan par. So this become how much batao? 1,44,000 plus 1,20,000 minus 80,000 minus 20,000 minus 50,000. So this will be 1,14,000 and this will be 1,40,000. This is 48,000. This will be 4,20,000 and this will be nil. Got this point? Now I'll prepare statement of net asset, date of acquisition, date of consolidation, and post may only PL will come. So the equity share capital is how much? 8 lakh. 8 lakh. Understood? PL, it is 1,14,000 and 1,48,000. That become 2,62,000. Have you understood this point? Bolo. Have you understood this point? Bolo. Correct. This is coming how much? 9,14,000. 1,48,000. Now this will be allocated. How much they have acquired? 64,000. So in this they have not given percent. So 64,000 divided by 80,000, because the number of shares is what? 80. So divide by 80 means they have acquired how much? 64 divided by 80 is equal to 80%. So this is 80%. The parent company share is what? MI is what? 80%, 20%. So 9,14,000 into 80% how much? 7,31,200 minus equal to 1,82,800. 1,48,000 का 80% how much? That is 118,400 minus equal to 29,600. Have you understood this? Sona also done. Chalega. Now we'll do goodwill or capital reserve. So what is the cost price of investment? And that is already already correct cost price. So no rectification required. The cost price of investment is 12,27,200. From this minus 80% of fair value of net asset, that also we have calculated. So we have calculated 7,31,200. It is 12,27,200 minus 7,31,200. It's coming how much? Oh, correct now. Achha, we have not added general reserve. General reserve is also what? 4,20,000. 4,20,000. This we have missed. Add general reserve. So 8 lakh plus 114,000 plus 4,20,000. How much? Is 13,34,000. 1,48,000. And this become 8 lakh plus 2,62,000 plus 4,20,000. Is coming 14,82,000. So 13,34,000 into 80% how much? Is 10,59,200 minus equal to 2,64,800. And 1,48,000 into 80% how much? 1,18,400 माइनस इक्वल टू इज 29,600 चलेगा। तो यहां से माइनस कितना करेंगे 10,59,200 तो 12,27,200 minus 10,59,200 is coming 1,68,000. Goodwill is what 1,68,000. Okay, sir. One minute. One lakh 44,000. We have done correctly, then allocation is wrong. What mistake? 8 lakh plus 114,000 plus 4 lakh 20,000. 13 lakh 34,000. Okay. Correct only. So into 18% how much? 1 lakh. Oh, what I am doing? Mistake 10,67,200. This 2,66,800. In mistake, in hurry now we always do mistake. Don't be in hurry. If I can do mistake means you can also do mistake. Now it will come 1 lakh. 12,27,200 minus 10,67,200 is coming 1,60,000. Okay, sir. This is the amount of goodwill. Now I'll come to minority interest. Minority interest will be this plus this. You can add yahin par 266,800 plus 29,600. So minority interest will be 2,96,400. Check karo balance sheet mein how much it is coming. Minority interest is coming how much? 2,96,400. It is correct. Then we'll write down PL and general reserve. First, can you give me what is the PL balance as per the H limited? It is how much? 9,60,000 general reserve. And PL is what? 2,28,800. In this you add whatever you have calculated. Share. So 1,18,400 will be added. And general reserve nothing will be added because no post acquisition profit. So 2,28,800 plus 1,18,400 is coming 3,47,200 plus 9,60,000. So plus 9,60,000 should be reserve and surplus. So reserve and surplus is coming how much in the balance sheet? Check karo. It's coming 13,07,200. So balance sheet will tally now. Balance will tally. Means one mistake what we have done right now ki 13,34,000 we forgot to write down general reserve. Correct na? So general reserve will be also added na. Chalo theek hai. Okay, it happens. But have you understood the entire concept? In this preliminary expense was a new point. I hope you have understood. So we have done up to what? Up to we have done how much concept? We have done up to concept number 9. So balance part will be in the second part. Second part will do the balance part. Okay. So I think up to this you have understood. Chalega. Okay, sir. So thank you very much for today. The next part we are coming soon for consolidation. In that we'll discuss what? The balance part. Okay, sir. Thank you very much for today. Means we'll meet soon with the next part of consolidation. Bye bye.